Hello investors and future investors, welcome back to the channel. In today's video, I want to challenge you to grow your portfolio by $100 weekly. I will also show you my latest addition to my options portfolio. And lastly, I will show you the next stock that I will be adding to my options portfolio. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies and other investments that can give you consistent revenue. We can all make weekly revenue if we want to. So I'll definitely show you what I'm doing on my end to generate revenue. Now, all I ask in return for this free content is an early thumbs up by you hitting the like button and consider subscribing for more ways to increase your investments. Welcome to Investment Gains. Let's jump right into it. Hello future investors and traders, welcome back to the channel. I'm super happy to have you guys as subscribers, and in today's video I want to challenge you to grow your portfolio by only $100 weekly. As usual, I will show you what I'm doing with my portfolio in order to achieve this goal. Just by an additional $100 weekly to your portfolio will boost your portfolio exponentially, and by the end of the year your portfolio should have a minimum growth of $5,200 if everything else remains constant. This $5,200 works out to be $100 multiplied by 52 weeks in the year. Now, I know what some of you guys are going to say. Some of you guys are going to say, I can't afford to do this, but I assure you that you can. There's two ways to get this done. The first way is by adding $100 weekly from your income, but this is the hard way since we all have our own personal expenses to cater to. The second best way to do this is by your investment gains. And this means using your money you get from trading to grow your portfolio. And there's several ways to do this. You can use strategies like cash secured puts, iron condors, debit spreads, real strategy, credit spreads, and the list goes on. But my favorite way is by selling covered calls. So let me walk you through my $100 a week plan, selling covered calls with stocks that I already own in my portfolio. By the way, I have videos on all these strategies I mentioned before. Let's start off this with my latest stock I added back to my portfolio, which is Mara. And you guys know how I feel about this stock. I absolutely love trading this stock. So let's go ahead. We're going to type in Mara. Now I will go through this one specifically, but I'm going to run through the others very quickly. So you just really need to pay attention to this one. Now, firstly, let's take a note of my average cost. Whenever selling covered calls, you always want to sell at a price above your average cost. There are some times, however, where you need to change this, but when that time comes, I will make a video with that. So my average cost here is $8. So I need to sell covered calls above the $8 range. So let's go ahead to trade Mara options. We're going to wait for the options chain to load, and now we're going to make sure it says sell and call because we're selling covered calls. Now we need to choose our expiration date 1 week out, which is what I like to do, and that's going to give us February 3rd. Now the next thing I'm going to do, I'm going to look for a chance of profitability of 80% or higher. My chance of profitability right here, and it has to be 80 or higher. So I'm going to go with the let's go with the 11.5 strike price. Now the reason I'm going with the 11.5 strike price, which gives me an 89% chance of profitability, is because this stock is extremely volatile. In my last video I did mention if you guys can trade this stock, you guys can pretty much trade almost anything. The volatility on this stock is absolutely crazy. Now with the 11.5 strike price and a high chance of profitability landing at 89.25%, that will pay me 18 cents or $18. Each option contract is multiplied by 100. We're going to go ahead to continue. We're going to select the amount of contracts we want, which is going to be 1. I could only sell 1 contract because I only have 100 shares. And down here you can see the minimum credit is going to be $18. Now that minimum credit is going to be mine to keep no matter how this trade goes. Let's go ahead to our second stock now, and our second stock is going to be Peloton. Keep in mind we're going to be receiving $18 for this. We're going to do a running total. So let's type in Peloton. We're going to open up Peloton, and then once again we're going to do the same thing. First of all, we're going to check the average cost, which is 8.33. We're going to go to trade Peloton options. We're going to use the exact same strategy, which is we're going to be selling covered calls. So let's make sure once again sell and call, and we're going to choose the exact same date, which is going to be February 3rd. Once again, my strategy is to look for a chance of profitability of 80% or higher, and I'm going to go with the 14.5 strike price. Now the 14.5 strike price gives me a chance of profitability of 86.86%, which is pretty high, and I definitely am satisfied with that. So I'm going to go with this. Now the payoff on this is going to be 0.26 or $26. Let's go ahead. We're going to hit continue. We're going to choose the amount of contract, which is 1. We're going to go to review order, and voila. Once again, I'm going to get an additional $26 added up to my portfolio, plus the $18. Okay, let's jump right into our next stock, and our next stock is going to be NEO, ticker NIO. So let's go ahead, open up NEO. Now keep in mind, guys, I do own all of these stocks, and I'm actually showing you what I'm showing you is what I'm doing with my actual portfolio. Now before we continue with NEO, if you guys are getting any value from this, just please give me a like at the bottom, and while you're down there, just consider subscribing. Okay, so here we are on NEO, and very importantly, always keep an eye on your average cost. So we're going to go ahead to trade NEO options. We're going to go to sell and call, and we're going to choose our strike date, February 3rd once again. Now, just to reiterate, my strategy is to sell weekly options so I can get that consistent weekly revenue. You can choose February 3rd. You can actually go 1 month out to February 24th. It all depends on you. This is just, I'm just showing you what I'm doing with my portfolio. So I'm going to look for the chance of profitability once again of above 80%. I'm going to go with let's go with the 13.5 strike price. Now, the 13.5 strike price gives me a chance of profitability of 85%. I'm definitely happy with that. And the payoff is going to be 14 cents or $14. Once again, we multiply this by 100. We're going to go to continue. We're going to choose the amount of contract, which is 1, because once again, I only have 100 shares. And we're going to hit review. So now I'm going to have an additional $14 added to my portfolio. So that's 18, 26, and now 14. Let's jump right into the next stock. And that next stock is going to be DraftKings, ticker DKNG. Let's open up that bad boy and see what kind of gains we can get from this one. So here we are with DraftKings. And this one is a bit ticklish because I have a very high average cost of 14.64. But I still think I could definitely get a price above this when selling this week covered call. So let's go ahead to trade DraftKings options. We're going to go once again to sell and call, and we're going to go to February 3rd. Now the reason I keep saying sell and call, I want this to stick in your heads. If you do make a mistake and you go to buy, you're going to be doing a completely different strategy. So always make sure it says sell and call. Now once again, I'm going to go with my 80% chance of profitability, which I really like, and I'm going to go with the $16 strike price. Now the $16 strike price gives me an 88% chance of profitability, and that's going to pay me $11. I'll definitely take that $11 and add to my portfolio. We're going to go to continue. We're going to choose the amount of contract, which is 1. We're going to hit review. There we have it. So that's an additional $11. Now $11 may look small, but keep in mind we just added $18, we added $26, we add $14, and now 11. It keeps growing. All right, let's move on to our next stock, and our next stock is gonna be XPEV, ticker XPEV. So let's go ahead. We're gonna open up XPEV now. Now once again, let's start off with the one important factor, which is your average cost. Now my average cost here is 9.28. So let's go ahead to trade XPEV options. We're gonna go to sell and call. I'm gonna choose the strike date, February 3rd. Now guys, if you guys think I'm going fast, that's just because I do this on a weekly basis. So this is like clockwork for me. So once again, my chance of profitability of 80% or higher, and that's I'm actually gonna go with the 11.5 strike price. You can see the strike price right up here, and that's gonna give me a chance of 85% chance of profitability. Now that's gonna pay out 14 cents or $14. We're gonna hit continue. We're gonna choose the amount of contract, which is 1. We're gonna hit review, and there you go. Another $14 is now added to my portfolio. All right, let's continue. We're gonna go now with the next stock, and the next stock is gonna be SoFi, ticker SOFI. Now with this one, I actually have processed this covered call, so I'm gonna show you. So my average cost on this is gonna be 5.8. We're gonna go to trade SoFi options. We're gonna go to sell and call. We're gonna choose a strike date once again, which is February 3rd. And now we're gonna look for 80% chance or higher, and there you have it. So I actually did buy the 6.5 strike price with an 82% chance of profitability, and I actually got paid out $14. So now that $14 is already added to my portfolio. I will give you the total at the end of the video. Now let's go ahead to our last stock, which we're going to be selling covered call on this week, and that's going to be Upstart, ticker UPST. Now once again, I've already sold a covered call on this one for February 3rd. So let's start off right where we need to start off, which is the average cost of 14.85. The reason I keep stressing on the average cost is try your best to sell your covered calls at above your average cost so you could win in two ways. If you want to see the two ways you could win, just go to my video on covered calls where I go into the specifics. So let's go ahead to trade Upstart options. We're going to go to sell and call, and we're going to choose the expiration date, which is going to be February 3rd. Once again, we're going to look for our chance of profitability. Actually, no, I actually did sell this one. Oh, there we go. I did. So I sold at a strike price of 19.5 with a chance of profitability of 83%. I received $32. So that's another $32 added to my portfolio. Now, with trading those 7 stocks, I actually have $129 of premium. Now, I'm not sure about you, but $129 is pretty decent for me. And as you guys can see, I did not take much risk. All my chance of profitability is in the high 80s. So even if the stock does go up, I will win. Now, I challenge you guys to do something similar with your portfolio. And maybe selling covered calls is not your style. You may prefer cash secured puts, or maybe you might even like the wheel strategy. But whatever you decide, I challenge you to grow your portfolio by $100 weekly. Or let's start off with just $50. As you guys just saw, I'm selling covered calls and receiving as little as $11 per trade by being conservative. And I can make even more revenue if I wanted to. But I'm taking my small gains so I could stay in the game. That's what's important. I'm trading for the long term. Now, you guys can do the same as well. But it all comes down to what you decide to do with your portfolio. Now, lastly, as I promised, I'm going to show you the next stock that I'm going to be adding to my options portfolio. And that stock is going to be Blink Charging, ticker BLNK. Now, I can sit here and tell you all the wonderful things about this stock, but I'm going to acquire it because, quite frankly, it pays more premium than its competition. Now, its competition is ChargePoint, and you guys know I'm all about the premium. I always look for stocks that are paying high premium but with low risk. And if you want me to make a video on how I find these stocks, let me know in the comments below. Now, we have lots of option strategies on this channel, so if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert whenever I post a video. But most importantly, please share this video with someone you think can benefit from its content. Let's help as many as we can. Remember, a salary will give you a living, but your investment gains will give you a lifestyle.